In this video, we will understand how a pricing spreadsheet, like the one you see in the image, can help you find the ideal selling price for your cookies. So if you make or bake cookies and want to know the selling price you should set for them, this video and the spreadsheet you are seeing will help you. If you are interested in this material, it is available for purchase through the link in the video description. This spreadsheet will price any product, including cookies, based on the manufacturing composition of that product. So you should enter all the names of the ingredients here in this item name column, then the quantity of each of these ingredients, and the spreadsheet will be able to do the pricing and determine how much you should sell this product for. However, when we are dealing with pricing, it is very important to keep in mind that you should price and arrive at the selling price not only based on the ingredients, that is, the products that will make up your final product, but also on a series of other information such as fixed costs and variable costs. What are these fixed costs and variable costs that this pricing spreadsheet allows you to see? These are the costs that will accompany your sold product. In other words, when we are specifying cookies, you have all the components such as sugar, butter, chocolate, eggs, etc. And there are also the fixed costs and variable costs to arrive at the correct selling price. So when you identify the fixed costs, you will enter this data. Here in this fixed cost spreadsheet, what are the fixed costs? They are all those that will exist, regardless of how many products you sell. In this example, regardless of how many cookies you sell. In this case, I am talking about rent, internet, and salaries. Maintenance, in short, all these costs that are appearing here. You should enter them, the name, and the monthly amount, so that the spreadsheet can take this into account when pricing. In addition to this information, you should enter your monthly revenue. In this example, $50,000, so that the spreadsheet can accurately determine how much should be allocated to each cookie to cover these fixed costs. Additionally, we also have the variable costs. Variable costs are all those that are applied as a percentage of the selling price. So let's suppose you have a cost, for example, of commissions 5%. It means that if you sell $100 in this case, 5% or $5 will be commissions. So every cost that is a percentage of the selling price, such as taxes, commissions, transaction fees, and credit card fees, should all be included in this list. You will enter the name of this cost and also the percentage of the revenue it will capture so that this is also taken into account during your pricing. Once the data is entered here where I am showing in columns D and E, the spreadsheet automatically sums them all up so that this is taken into account when pricing. And then, finally, you will enter the materials. The materials, in the case of cookies, are all those ingredients and also other components of the product, such as, for example, packaging that you need to insert here to then assemble your product, assemble the cookie. So, the material is nothing more than the registration you will make of these ingredients. How should you do this registration? You will enter the product name in the first column, then the reference quantity, and then the price related to that reference quantity. Each row you enter will be a different product, a different ingredient that you will later use to compose your final product. So for example, let's take the case of sugar. I entered the name sugar here in column D. Then I say that it costs me 64 cents to buy 1,000 grams of sugar. Then you will enter here in the corner what the unit of measurement is, and you will acquire this in the market. The name of the product. What is the value of this quantity? Another example, butter. Butter costs me $3.64 per 500 grams of butter. Then you have to enter, in this tab, the cost you find to buy these products, which will later help to compose your cookie. In this case, then you register all the ingredients and items such as packaging. Packaging for 55 cents, I buy 10, so in this case, you also register it in a row to later use it in your cookie's pricing. Once all this data is entered, it is now time to effectively price the cookie as we had previously discussed. For this, you come here to the unknown cost pricing. Here in the item name column, you will enter all the ingredients you will use in this recipe. Remember that only the items you registered here in the Materials tab will appear here automatically. Besides the item name, such as eggs in this case, in the column in front you enter how many of this item you will use, respecting the unit of measurement you had placed here. So, for example, if you registered the sugar data in grams, 1000 grams, sugar, 1000 grams, you should, here in the sugar section, enter the quantity, in this case 200, also in grams. And here in the item registration within the recipe, you entered sugar 200 grams, and the spreadsheet understands that the measurement is in grams because you had also registered it in grams. You will do this for all the items that will make up your product. You will enter the name and the quantity, and the spreadsheet will automatically arrive at the selling price based on the information you provide. However, before you actually reach the selling price, you need to adjust your desired profit margin, which is right where I am showing. In this example, I set it to 30%, but you can change it to 20, you can change it to 15, you can change it to 35, you can change it to whatever you find interesting and fair for your business. Remember that the profit margin is the net profit that remains after you pay all the fixed and variable costs as well as the cost of the product you are selling. And finally, you need to enter information on how many units this batch produces, because sometimes you will enter various ingredients here that will make up a large recipe. With this recipe, for example, you will be able to make 8 units. So you come here and enter this batch and produce 8 units, so that in the individual pricing, the spreadsheet can price exactly the amount per cookie and not for the entire recipe. So we are assuming here that this entire recipe will produce a single cookie, and then you will enter 1 in this column with all the data you have entered so far, whether it is product composition or fixed and variable costs. The spreadsheet can determine the selling price. In this case, it uses the fixed costs, variable costs, and the desired margin, calculates the markup, and thus arrives at the selling price, which in this case is $7.50. If you look here on the side, I have a whole progression from the selling price to the net profit margin you will have. When you sell a cookie, you will notice that you will sell it for $7.50, which is your selling price. Then, those variable costs that you had previously mentioned, all of them appear here. Fiji, credit card, commissions, Fiji transaction, each taking a percentage of the selling price, totaling in this case 11%. After the fixed costs, they will total 22.7%, which is the amount you had indirectly entered here. This 22.7% will result in $1.70 from the sale of a cookie. What does this mean? This means that when you sell a cookie, you set aside a small portion of that sale to cover the fixed costs at the end of the month. And when you sell that amount you had indicated here for the total of the month, you will have already set aside an amount from each sale made to cover the total fixed cost within your month. Additionally, the production cost referred to here is for the manufacturing of the product, and you have a total cost, in this example, of $5.25. If you are going to sell for $7.50, you have $2.25 left, which is exactly 30%, which is the value you had previously informed as the desired margin. This spreadsheet does all of this automatically and dynamically. If You change any information, for example, change the cost of some raw material. You enter the information here and your selling price will be automatically recalculated. This spreadsheet, as I mentioned, is for you to price cookies that you will be manufacturing or any other item. If you have, for example, a product for resale such as a t-shirt or even a cookie that you are already buying ready-made and will just resell, you enter it here in the pricing tab with the known cost. And the spreadsheet can also arrive at the selling price in an extremely simple way. As I said, this Excel spreadsheet is a very easy and comprehensive way for you to price anything, including cookies, and it is available for purchase at the link in the video description. Don't miss the opportunity to have an excellent spreadsheet as an ally in your daily routine and a tool that will provide you with good and secure results. See you around, and take care.